Pet Valu, one of Canada's big pet products retailers, reported a revenue beat in the fourth quarter, making it the best performing stock today on the TSX. We're joined now by Bloomberg Equities reporter Stephanie Hughes. Stephanie, welcome to the show. Great to have you and your updates as always. Tell us what investors liked about these Pet Valu numbers.
Of course, Paul. Well, Pet Valu, it was one of the bright spots on the TSX today, with shares moving up as much as 11% today, which, as you mentioned, made it one of the top TSX performers, and it was the biggest gain, intraday gain for the company since August 2022. And that's because the adjusted earnings of 45 cents per share came ahead of what analysts were expecting. Now, that's at the same time that the adjusted EBITDA forecast for the year ahead slightly came below Bloomberg consensus estimates there, but not by much. TD Cowen analysts said that the guide was in line with their estimates, which they said should be a small relief for investors who were concerned that a weaker Canadian dollar would really weigh on the company's margins, considering that 22% of the products they buy are in U.S. dollars and 15% are sourced from the U.S. That also brought the profit growth into question, but TD Cowen's team sees this earnings report in the fourth quarter as being pretty neutral so far, as the worst has been pretty much avoided here. Even still, management said that it was keeping an eye on the foreign trade environment, i.e. the trade relations with the U.S. right now and tariff risks. But they did say that they have the means to adapt as that situation unfolds. The company said that there are more positive signs, like a cooling inflation environment and lower interest rates, that develop potential building blocks and a constructive environment for the company to do better. So seems like they're making the best of a messy trade situation. And it does also seem like people are still spending on their pets despite the softer same-store sales growth there. And I am one of those pet owners spending on their pets still. My cat and iguana eat much better than I do there, Paul.
Yeah, likewise in my household. My advice to would-be pet owners is it will cost money to own and enjoy the company of a pet. Magna International, let's go there. A less rosy story.
Yes, less rosy for Magna, and those shares fell as much as 6% today, making one of the worst performers on the TSX for at least the morning. And the stock price fell to its lowest level since April 2020, so that's like pandemic levels of trading there. And it's basically Magna is being hit with a double whammy here. The first obvious one is that it is an auto parts retailer company that is unfortunately trading at a day one of Trump's tariffs being imposed, and we're seeing a lot of industrial names really take a hit from that. The other part of it too is that Bank of America analysts downgraded the company to a neutral rating, saying that the electric vehicle market has slowed down. And noted that Magna before has been in this position to really benefit from the EV expansion in North America. But now that that market is slowing and the dynamics are becoming more volatile for that sector there, it's really expected to weigh on even the long-term growth for Magna. So two pain points there that Magna is stepping on, and you can see that reflected in the share price there, Paul.
Stephanie Hughes of Bloomberg News. Thanks a great deal, Stephanie, for the update on Pet Valu and Magna International. She is the equities reporter at Bloomberg News in Toronto.